There is a number. It is not an estimate. It is not a guess. It is a historical fact. 89%. Between September 1929 and July 1932, the American stock market was not corrected. It was annihilated. It was a 34-month public execution of the nation's wealth. A financial collapse so total, so complete, that it took 25 years for the market to regain its previous high, 89%. This number is the ghost in the machine. It is the dark blueprint our system tries to forget but cannot escape. We are told that 1929 was a relic, a black and white photograph of panicked men in fedoras jumping from windows. We are told it was a primitive anomaly, a failure of an infant system, a mistake that could never happen again. We are told we are protected now. We have the FDIC. We have circuit breakers. We have the Federal Reserve, the new high priest, standing guard to provide liquidity. This is the great illusion. Today, in late 2025, we are not just rhyming with 1929. We are following its blueprint step for step. We are standing in the same room, holding the same match, and staring at the same barrel of gasoline. The only difference? This time, the barrel is infinitely larger. To understand what is coming, you must understand what really happened. This is not a story about jazz and flappers. This is a story about the architecture of a crash, an 89% equation. It is a story in 3 parts: the lie of the new god, the poison of inequality, and the accelerant of leverage. And it is a story that is happening right now. The 1929 crash, we are told, was born from pure irrational speculation. This is a half-truth. The speculation was not irrational. It was evangelical. It was a religious fervor built on the illusion of a new era. In the 1920s, the new god had a name. It was technology. For the first time, humanity had harnessed the electron. The new gods were the automobile, the airplane, and most importantly, the radio. The poster child for this new religion was the Radio Corporation of America, RCA. In 1925, you could buy a share of RCA for $11. By 1928, it was $400. This was not a stock. It was a miracle. The story then is the exact story we are told today. The argument was that the radio had changed the human condition. It connected the world. It created a new economy. Therefore, the old rules of value, things like profits, earnings, fundamentals, no longer mattered. This time, it was different. This belief, this faith, was the first pillar of the crash. It was the permission slip that allowed Wall Street to detach price from reality. They were not selling a stock. They were selling a piece of the future. Now look at 2025. Does this sound familiar? Today, the machine has a new name. It's called generative AI. And the new picks and shovels company, the new RCA, is NVIDIA. NVIDIA is a real company, just as RCA was. It makes a real product. But its $4.5 trillion valuation, its stock trading at over 100 times earnings, is not a valuation. It is a religion. Just like in 1929, we are told that this time is different. We are told that fundamentals no longer matter. We are told that AI will cure cancer, end poverty, and deliver a utopia of code. The Magnificent Six, Microsoft, Google, Amazon, Meta, Apple, and their god, NVIDIA, are not just companies, they are the new faith. In 2024, these few companies were responsible for over 90% of the S&P 500's gains. This is not a market, it is a monolith. The $10 trillion AI mirage is the exact same pillar that held up the 1929 bubble. It is the new god that demands our faith, demands our capital, and promises a future that justifies a fantasy price. The first pillar is in place. The second pillar is the one that history books never discuss. It is the dirty secret of the Roaring Twenties. The 1920s did not roar for everyone. The Roaring Twenties was a story of a profound, systemic, and catastrophic divide. While the stock market was a fantasy, the real economy for the average man was hollow. In 1929, the top 0.1% of Americans, the titans of the day, had a combined income equal to the bottom 42%. Think about what that means. The industrial machine, Henry Ford's new factories, the new industrial capacity, was pumping out products at a rate never before seen in human history. It was a miracle of production. But the vast majority of the population, the bottom 42%, the farmers, the workers, did not have the income to buy the products the machine was making. This is the poison. When the average citizen cannot afford to buy the products of the economy eats itself. The money, the profits, had nowhere to go. So instead of being used for consumption or new wages, it flowed upward to the titans. And what did the titans do with it? They did not build new factories. The public couldn't afford the products from the old ones. They poured it into the only place that offered a return, the stock market. The stock market of 1928 was not a market of the people. It was a closed loop. It was a casino where the ultra-rich were using their excess capital to bid up the prices of stocks, which were owned by other ultra-rich. The roaring market was a mirage, detached from the stagnant, hollow, real economy. Now look at 2025. The parallel is not just similar, it is identical today. The top 0.1% of Americans own more wealth than the bottom 90% combined. The Magnificent Six are a $10 trillion fantasy, while the average American consumer is drowning under $1.1 trillion in credit card debt. The highest in history, the consumer is strained, indebted, and running on fumes. The real economy is stagnant. Productivity is flat. But the AI machine is promising infinite growth. The money is flowing upward. Corporations are not investing in new factories or higher wages. They are buying back their own stock at record rates and pouring their remaining capital into the one thing that promises a fantasy return, the AI bubble. The 2025 stock market is the same closed loop as 1929. It is a casino where the titans, Microsoft, Google, Meta, are using their capital to bid up the price of the picks and shovels, NVIDIA, which are then sold back to the titans. It is a snake eating its own tail. The second pillar, the poison of the Great Divide, is locked in place. The market is top-heavy, the foundation is hollow. We now have the architecture of the crash, a fantasy story, AI, and a hollow foundation, inequality. But that is not what causes an 89% collapse, that is what causes a correction. To get an 89% vaporization of wealth, you need one final ingredient. You need the gasoline, you need the accelerant. In 1929, the accelerant had a simple name, buying on margin. It was the great illusion of the 1920s. It was the belief that you did not need money to make money. In 1928, an investor could walk into a brokerage and buy $1,000 worth of RCA stock with only $100, 10% down. The other 90% was a loan from the broker. This was the machine that created the fantasy. It was a nationwide, debt-fueled rocket. As long as the stock price went up, the investor was a genius. He could sell for $1,100, pay back his $900 loan, and have doubled his money. But what happens when the price falls by just 10%? When that $1,000 stock hit $900, the investor's entire $100 was gone. He was wiped out. The broker would issue a margin call demanding the investor pay back the 90% loan in cash immediately. The investor didn't have it. He was forced to sell all of his stocks to cover the call. This forced selling pushed the price down further, which triggered more margin calls, which forced more selling. It was the perfect automated self-destruct sequence. It was the accelerant that turned a dip into a collapse. Now, look at 2025. We are told this cannot happen again. We have margin regulations. This is the great catastrophic lie. We have not eliminated the accelerant. We have just given it a new, digital, and far more toxic name. In 1929, the leverage was margin. In 2025, the leverage is zero DTE options. 0 day to expiry options are the 1929 margin call on steroids. They are pure, uncut digital gasoline. These are not investments. They are $1.2 trillion in daily casino bets, expiring in less than 24 hours. It is the gamification of the entire market. Millions of retail traders armed with commission-free apps are not investing in NVIDIA. They are betting on where NVIDIA's stock will be at 4 p.m. Today, this is not investing. This is a national lottery. This massive, unseen, daily leverage is the accelerant. When the new god, the AI, finally disappoints, when the hollow foundation, the consumer, finally cracks, it is this $1.2 trillion in daily options that will become the margin call of 2025. A 5% drop will trigger a 50% drop. A technical glitch will become a systemic vaporization. The three pillars are in place. The 1929 blueprint is complete. The stage is set. So we are doomed to repeat the 89% crash? Not quite. There is one thing that is different. One player in the game that has changed. In 1929, the Federal Reserve was an infant. It was weak. It was run by men who believed in the old Austrian gods. They believed that the system needed to be purged. When the machine broke in 1929, the Fed's response was to tighten. They raised interest rates. They withdrew money from the system. They allowed the machine to die. They watched the 89% collapse and called it necessary medicine. The crash of 1929 was a deflationary depression. The money disappeared. The banks failed, the loans were vaporized, and the currency itself became scarce and more valuable. This is not the Fed of 2025. The modern Fed learned a different lesson from 2008. They learned one single command: thou shalt not allow a collapse. The Fed is no longer a banker. It is the high priest of the machine. Its job is not to punish, but to save. Its solution is not medicine. It is printing. When the 2008 machine broke, the Fed did not let it die. It printed trillions. When the 2020 machine broke, the Fed did not let it die. It printed trillions. When the 2026 crash comes, when the AI illusion shatters, when the productivity lie is exposed, when the zero DTE leverage unwinds, the Fed will not stand by and watch an 89% collapse. They will do what they always do. They will pull the great industrial retro-futuristic steam-powered lever. They will provide liquidity. They will print. But this is the final, terrible secret. In 1929, the market collapsed, but the money was real. The dollar was a rock. In 2026, the Fed will save the market by destroying the money. The 89% collapse is coming, but it will not be an 89% drop in the price of your stocks. It will be an 89% drop in the purchasing power of your dollars. We are repeating the blueprint, but we are headed for a different destination. 1929 was a deflationary confession that the market was a lie. The coming crash will be an inflationary confession that the money itself is the lie. The machine of 1929 was allowed to break. The machine of 2025 has become our god, and we, its high priests, will sacrifice the currency itself to keep its dark, industrial phantom heart beating. The ghost of 1929 is here. It is not here to warn us. It is here to show us the blueprint.